The Union Budget for financial year 2024 is a few days away. It is likely to be the last full-year budget before the general elections in 2024, and it's coming just ahead of the crucial state elections in 2023 this year. What will these considerations mean for policy making in the budget? What can the government do to push the growth pedal even harder? And what will the market make of all of it? I have with me someone who's seen many budgets over the years. Samir Arora is founder of Helios Capital, and it's a pleasure to have him with me in the studios.
Thank
Samir,
you very much.
Great to have you with us here.
Physically with you.
Absolutely. Not on Zoom and Skype, and so this is so much better. What's your sense, Samir? How is this budget looking to you?
Well, actually, when you say that I've seen all these budgets, last few times I have stopped seeing them as seriously because most of the big picture reforms or steps have been taken. And so I think even this budget will be at the end of it more or less event-free, which is what we need. We don't need new sudden announcements. But in general, I would think that because of elections or even otherwise, because of just the way the policies have been, and because there have been good GST collections, good railway budget, railway revenue beyond target and all, that there should be no increase in any tax.
Right.
And secondly, that there should be some more money in the hands of the middle class, because generally they have not benefited at all for many years in terms of anything from the budget.
Right. Do you think, the fisc has not been a concern for a long time now, right, under this government?
That has not been a concern because the limit was raised once and then over time it has to be reduced.
Right.
But just coming after COVID, now more time has been given by not only investors to Indian government, but to all governments.
Correct.
That over the next X number of years.
But there's no worry in
there's
that
not
sense.
Today, nobody's worried.
I remember, if you remember, a few years back, that used to be the focal
Correct,
point.
3 point something or whatever, then suddenly it became 6. And now, over time, it is supposed to reduce, so there has to be a path shown.
Yeah.
But nobody's looking at it in this budget. That.
Do you think it'll be a little bit of a populist kind of a budget, as you said?
No, this I don't consider populist. If you just raise some exemptions or you basically make the taxable level, whatever you call it, band higher, that is not that populist.
Some more exemption, basically, some more money left in the hands of...
give some more money to the consumer so that they can buy things that my companies produce.
What about
I won't call that populist. I will call that thank you very much.
Capitalist.
Capitalist, yes.
The one thing, though, is this entire capital gains tax issue, right? I mean, comes up again and again. What's your sense? Anything changing?
I mean, that would be really bad thing if it happens. I think it's not happening because you also need an environment for that. If you are separately saying as a government that GST is doing well, other collections are good, there is no need right now to, in an environment where last year was quite bad for world markets, to increase taxes on a capital gains account where separately everybody knows that no other country gives taxes, charges taxes to foreign investors. Now, since you can't separate between foreign and local, that means now you cannot increase. Plus, the capital gains everybody knows was brought in when STT was first brought in to remove capital gains, and now STT was retained and capital gains was brought back. Right? Previously there was capital gains, then they said do only STT because that's easier to collect. Then now in 2000, was it 18 or 19? 18 they brought back capital gains without removing or reducing the STT. So why do it now when we need capital?
Why rock the boat?
Why do it? And also there is no big picture justification that we are trying to collect more revenue for the government, because the government itself is saying that everything else they are collecting nicely.
A lot of tax experts have spoken to, they said maybe not the rate of taxation, but all these asset classes have all these different thresholds for collecting, right?
Part of life.
Equity is 1, debt is 3, real estate is something, unlisted equity is something. So maybe rationalization.
So do it on the debt side where if you want to help the banks, that the bank deposit gets full tax, whereas the mutual fund with debt or this thing has a lower tax. But don't come to our side, please, because the equity guys are... when you
the point is rationalization. If it happens, equity goes to debt or debt goes...
you don't touch us and you rationalize as you want. But rationalization should not be seen as indirect way of increasing somebody's tax.
Correct.
Unless it is very specific that this is being taken advantage of. If some loophole is there, that is a different angle. No, I know some loopholes they say in debt, in these market-linked debentures, which are not really market-linked. It is just to convert interest income into a capital gain kind of treatment. So that you can say somebody's twisting. But in equities, because generally the world does not pay equity and there is no taking back that exemption, you don't get there if you pay tax here. So that money is just gone from the pocket of the FII. Now the FII and domestic now have the same thing. So therefore it has to be for everybody that please don't raise. Government has to sell, new IPOs have to happen, so many things have to happen. So you are right, don't rock the boat on this.
Do you think it makes sense, and some of the view that the government will actually do more to make sure that India's investment attractiveness stays where it is?
Absolutely, but actually the thing is that India has become attractive, A, for its own reasons, and B, because China has become less attractive. And people have to be nervous about China. Let's not dream that we are substituting China. We are saying the overflow from China.
No, it is +1, right?
It's China +1. It's not China out and only the +1. Correct.
I don't think anybody's saying that. It's +1.
Or you put +2.
+2.
So that people don't say only Vietnam, because supposedly that is the hot alternative these days.
In terms of sectors, I mean, infrastructure, for example, right? There has been a
lot of investment.
I think I was looking at some preview notes from economists. They were saying capex spending could go up another 10, 11, 12% in that range, which actually is on trend and pretty healthy.
So some of these high-profile projects are really good. I was seeing some photos somebody was showing me today on this Mumbai-Delhi
the corridor.
Which with 12 hours you can go from Mumbai to Delhi or vice versa. But we are talking from a stock market point of view. We don't know what that means, so we will just clap for the country and the economy, but we are not buying anything who's making these roads. Because that, first of all, who knows who's getting the road order, and then whether he's giving at L1 and how much money he makes, and then whether he will get paid on time or not. But the infra is happening.
Which is great news.
But correct, as a big picture, every line doesn't have to be that I have to buy a stock for that.
Absolutely.
So what we have seen over time is that previously we used to look at railway budget and get excited that there is some safety investment. So you're looking for signaling companies and all
But
that.
railway capex has been a big theme, Samir, right?
That's what I'm saying. But broadly, we have graduated.
Stayed away
we
from
don't do that because we used to do all this all our life. And in the end,
But now there is no railway budget, at least not a separate one.
But I'm saying I don't react to somebody saying he's got an order of making a road or making water pipes or laying down water pipes. All that we say, excellent. Now they can invest in our fund, but we are not investing.
I got that. Any other sectors? I mean, broadly, not from an investment point of view, but banking, financial services, auto.
Exactly.
I mean,
big picture, if you look at the Forbes billionaires list and say from where do these billionaires come, because that shows wealth creation in the long run, they will only come broadly from three sectors, which are consumer, tech, and financials. I don't think you'll find a fourth. Big manufacturing types are not very many, because mostly those guys get diluted along the way, unless they become very big companies like some TSMC or something, hundreds of billions. For manufacturing companies, mostly because of dilution along the way. The original owners are there, but they are not able to retain
all that value.
50, 60, 70% of the company, which means that those companies needed a lot of external capital to grow, which means from a stock market point of view, it was a dilutive business or whatever way you call it. So big picture, the growth is in these three sectors.
And these are sectors, budget, no budget. I mean,
we are going to not change, but we are hoping that the consumer sector gets a small flip if there is some more money in the hands of the public.
Got that. Samir, stay with us. I have to take a quick commercial break, so let's do that. Samir Arora, Helios Capital, with us. We'll come back, discuss markets now. What does the market do post the budget, and what's Samir's view across a range of sectors? Stay with us. Welcome back to this pre-budget special. We are in conversation with Samir Arora, founder at Helios Capital. Samir, great to have you with us. We were talking about what to expect from the budget, but the budget will come and go. The market, of course, continues.
Has to move on.
Has to move on. It will move on. In what direction, though, is the question. We discussed earlier how we were standing out, but in the on the other side.
But not that is negative. It's just that we have not, because we've not had the FII flows, which have surprised me, because if US is doing okay so far, and China is doing okay, that means the world is broadly okay, because these are the two big overhangs from 22. I would have thought that if they are doing well, then India will also be up and it will get some flows. But what seems to have happened is that people, FIIs, are taking out money from India to put into China, because China, Korea, Taiwan all have had massive positive inflows this year. I can't believe that that is a longer term trend. That even if you believe that, okay, China has recovered and you want to play the rebound trade, that you have to take out money from India to put there.
Correct.
So I think this is just the first round from people who act fast, react fast, maybe hedge fund types who have fixed amount of money. So they are moving from one to the other. But we don't believe that some new sovereign, a new allocation from endowment would mean that go overweight on China. That you have to take out from India. Therefore, if those two markets are broadly steady to up, we can't be down. We may underperform for some time.
What is your view on the US? I know you track that
So for
closely
US,
as well.
my logic is that in the next 2-3 months, unless it's already happened, because this month Nasdaq is up more than 7% and S&P is up, I think, 4% unless it's already happened, that the US market will not be negative this year. First of all, very few occasions in the last 100 years that the US market is down 2 years in a row. In my life, I've seen it only once, which is 2000 and 2001. Secondly, if you see their issue, which is to do with interest rates and inflation, that will play itself out in maximum 3-4 months. One will be on our budget day, Feb 1st, but after our budget, and then maybe 2 more. They have already signaled to you broadly that 5 to 5.25 mein they will pause. They will pause till the end of the year. So in that time, what is the new negative news? I mean, unless it's some completely independent black swan kind of thing. But broadly, this news would have played itself out.
The question, though, is how much will it hurt to control inflation? How much will the economy hurt?
So that you'll start knowing from now only, because now the earnings will also come. But what I'm saying is, on the margin, once you stop raising rates, तो उसके कितने महीने बाद you'll worry कि now it's still negative.
Correct.
And by end of the year, you have to start believing that there will be some cut. Right now, the US market believes it will happen earlier in August, September. Let us say, I don't think it will happen so fast, just because the Fed, the chairman keeps saying, I am going to show you guys kind of thing. So let's say end of the year or even first quarter of 24. So uske liye to December tak it will be okay. So I don't think the US market is falling or falling a lot or even falling, I think. And therefore, every day we won't have to look at to say, oh, US market is falling or we should wait for it to settle down. And China is already doing well. I think it's doing too well for no reason, but let us say it is doing well. So if both these are not a negative triggers every day, then life moves on and people will say, let's put money in emerging market in Asia, ex-Japan, because China is part of that, or we are part of that same bucket. We should not be having outflows. If we had a few billion of inflows, I think our market will be okay. Because domestics have the money and they will again come.
Actually, that's an interesting point. You know, we say India or China. The point is that we get most of our money through emerging markets.
Yeah, exactly.
And if the EM basket gets money, China gets money, we will also get money.
Correct.
So actually, it's good news. It's positive. That,
it is generally supposed to be positive. That's why this month I'm surprised that US is positive and China is positive and we are actually not negative. But why it looks every day that we are having a very weak day and flows are in the opposite direction, at least from an FII.
But when you say that US should be okay, then why are you not buying IT stocks, Samir?
So I am not buying IT stocks because the Nasdaq stocks, which are up, like many of the Nasdaq stocks are up 20-25%. I own some of them in our fund. But those stocks are actually last year were down 60-70%. These were not stocks down 20%. But if you look at the big names there, Microsoft and all, just 2 days ago, Satya Nadella said that he's seeing slowdown in his customer base. That's why they are firing whatever, 12,000. Google said, Salesforce said, the cloud guys said, this business software guys said. Only we don't say. So I have to wait for them to say.
And that will start now because earnings, etc., will start to.
Plus, no, I'm saying the Indian companies don't. We mean the Indian companies don't say. So let them say or let them.
But is it possible
my
that...
feeling is that even if these guys do well in the stock, they are not going to pay the hell out of me. So then I can live with it for a few more months. It's not that I will feel so bad that I should have had this instead of this. I am in fact hoping that the budget will boost some consumer type behavior which might help my consumer chotu stocks, which are all these low ticket consumer, if there is some attempt to help the middle class. And secondly, pre-election year, so a lot of spending will happen across India by all parties, on rallies, on public, on trucks, on everything. Few billion will be spent. So that also is okay for my... So it's not that IT has to do badly. It should not pain me.
Which means it should not go... It should not hugely outperform
my 8-10%. If it outperform 1 or 2%, who cares?
It is fine. Yeah. Banking and financial services, right? I mean, numbers have come through. I say all numbers have been pretty good.
Response has been not good.
Response has not been good.
Because that again, same thing. Now you need new. See, right now, the existing crowd can say we have it, although they don't have HDFC Bank. In fact, HDFC Bank has therefore done the best. I read a report from one broker that HDFC Bank could have 5 billion of buying by foreigners if this thing happens that the MSCI weight, which currently only HDFC there is there and not HDFC Bank, but when they combine that, the weight goes to like 11-12% instead of I think 6%. That is worth $5 billion in one stock.
Once the merger is
just approved, which I think has to done. Has to, but mostly everything has been approved. So plus minus 3-4 months, maybe June, July or sometime like that. So
financials will do well when foreign money...
So I'm saying a little bit, because you need new money and then they are supposed to buy 35-40% financials, right?
Correct.
Right now, maybe they had it last year and now there's no new flow. So the whole game is a little bit of new flow which will solve many of these issues. But at the end of the day, if you know that guy is growing at 20% and the stock is not going up, but it was not overvalued to start with, then you know you will get it. Sometimes it happens that, okay, it's growing 20%, but the P was all-time high, it was 70 times, so it was discounted. In fact, it was supposed to grow 30% for it to do well, which is happening with these consumer guys. So right now, we will have to wait to see all these things.
Last week, earnings from a lot of consumer companies saw earnings downgrades.
Yeah.
Right? What's your view there? I mean,
so I think
their valuations are also very stretched.
But I
That's
think
a problem.
one thing is that this is coming out that the rich are enjoying and the middle class is not that it is hurting to like pain, but they don't have new money, or maybe the pent-up part is over and you're going out first time after COVID is over and now that base is also going to be increasing. That is why I'm saying, even we have many of those consumer stocks which haven't done well this month and maybe even in December. So that's why we also need the budget to boost consumerism.
No, but are you worried that maybe there is a bit of a slowdown and it may fester all through this year?
Well, the thing is that because we buy only these low ticket things. So
but that is where a lot of the
no, I know, but in general, we believe also that middle class is there and, you know, if you can't afford the big thing, maybe you'll go and buy more of my burgers or go and see more movies or go out more.
Or footwear.
Or footwear, correct, or many things. Or you could go into a cheaper hotel like my Lemon Tree or something, who knows. So the point is that generally the consumer grows over time.
Right.
It could grow because of this spending on elections or whatever. So in the end, you don't have to walk away from these things. Because these things are, you know, basic. If these are not going to grow, how will India grow?
Correct.
Because it's relying on India's demographics, on middle class increasing in size, on middle class having more income. So I don't think these are too basic to... Here the only game is not this. The game is you should not overpay. And if you have overpaid, 6-9 months might go, but you should not overpay for 3 years of growth.
Generally for consumer space, you think PE multiples, which everybody's gotten used to, 30-40 times is, you know, you think...
But not 70.
But not 70, but even you think there will be a bit of drop-off which will happen if...
See, if these guys, because we are trying to buy companies which are growing 20% type for a 30-40 multiple for next year, not this year.
Okay.
If you have 50-60 multiple for 10-12% growth, then I don't like it. if you are going even 20-22%, okay, in Indian context, we have been used to it. But the problem is to try and change the game. To say should not look at P, we should look at cash flow. That is just a misrepresentation, because even prior to all this analysis, why did Tata Steel have 6P and some other consumer company had 30P? Because it was known that fellow is cyclical, that fellow needs capex, that fellow will have this, not just Tata Steel, any of these. So you already, because of that, gave 5P to one group and 30 to another. Now you can't say, no, this guy's got cash flow. Hello, if he didn't have cash flow, put him into the 5 category. That's what I mean. You can't say, because he has cash flow, I'll go to 70. That group already had 30-40 multiple for these reasons. And another thing is that if a company is too efficient in converting to cash, it is doomed. Because one part of the growth of life is improvement. If you're already perfect in everything, then now you're only reliant on top line growth. Because now everything else, how much can you squeeze out of savings, faster working capital, recovery, efficient? That has a limit. In the end, it has to be from growth of the top line. And cash flow is from whatever earnings you made converted to cash flow. But you can't overdo that.
Any other spaces, apart from what we've discussed, which you like
We
now?
have bought defense. And we have bought even...
That's a new addition, defense?
No.
It's
we had Bharat Electronics for like about a year, must be. Last Jan. But only one. But right now we have bought these two beaten up, everybody's talking about, so I might as well tell you, these two beaten up Paytm and Zomato, which has become so much in the news. Although we buy only 2.5% or each. But we have bought them and we are now favorably inclined.
Is it like a punt, or you really betting that this is a...
We don't punt.
No, I don't mean punt in the... I don't mean punt in the punter...
All our punts in the sense, we always buy 2.5 of newer things. So we don't buy 5, I know everything. But it is fair to expect some good return. Let's see.
Samir, it's a great pleasure to host you in the studios here. Thank you so much for your time. Really appreciate it.
Thank you.
Well, that's a wrap on this episode of What the Markets Want. Thank you for watching. Thank you for staying with us.